Hello students, this video is a continuation of my previous video on Statement of Affairs from the chapter Liquidation of Companies. I have already uploaded 7 videos for the chapter Liquidation of Companies, but some students as well as teachers wanted me to do videos on Statement of Affairs preparation. So I have uploaded one video on Statement of Affairs in which I have explained the format of Statement of Affairs in a simplified manner. The video which I am going to upload now is Liquidation of Companies Part 8, in which I am going to work out a problem involving the preparation of Statement of Affairs. For a better understanding of this video, kindly watch my previous videos relating to this chapter, for which I will give you the links in the description. Let me proceed further now. Let me read the problem first. The following information relates to Chandran Limited, which was wound up on 1/4/2018. Share capital 10,000, 8% preference shares of rupees 100 each fully paid 10 lakhs, 5 lakh equity shares of rupees 5 each 25 lakhs, less call areas 10,000, 24 lakhs 90,000 in the auto column. Liabilities, secured loan on first mortgage on land and buildings 1,50,000, secured loan on floating charge on companies undertaking 8 lakhs, unsecured creditors including preferential items of rupees 60,000, 21 lakh 60,000. Assets, you are given the estimated realizable value as well as the book value. Land and buildings, 1,80,000 estimated to realize, book value 3 lakhs. Plant and machinery, 12 lakhs and 15 lakhs book value. Furniture, estimated realizable value 50,000, book value 30,000. Vehicles, 50,000 and 10,000. Stock, 4 lakh and book value 8 lakhs. Book debts, good, estimated to realize nothing is given. Book value is 8 lakh 28,000. Doubtful, estimated to realize 1 lakh. Book value 1 lakh 50,000. Bad, in estimated to realize column nil. In book value column 40,000. Bills receivable 90% estimated to realize, book value is 20,000. Loans considered bad in estimated to realize column nil, book value 1 lakh. Cash 12,000 in both the columns. Bank 10,000 each in both the columns. Note, bills discounted and awaited maturity rupees 20,000, of which rupees 10,000 is estimated to be dishonored. Prepare statement of affairs number 1 as regards creditors and number 2 as regards contributories. So this is what is the problem we have, and based on the information given in this particular problem, you are required to prepare a statement of affairs, and it is given the statement of affairs is to be prepared as regards the creditors as well as regards the contributories. Before you proceed with the answer, you have to recollect the format of the statement of affairs. Only if you are thorough with the format, you will be able to do the answer correctly. Okay? As you all know very well, as per the statement format of the statement of affairs, you have several lists involved. So the statement of affairs involves various lists starting from list A to list H. If you can recollect, list A and list B relates to assets, and starting from list C to list H, we have liabilities, list relating to liabilities. Keeping this in mind, let us proceed with preparing the statement of affairs. So you have to give the heading as statement of affairs of such and such company as on such and such date, As per this particular problem, if you see the problem, you will know you are given the following information relates to what is the name of the company you have. The name of the company is given as Chandran Limited, Chandran Limited, and the date on which the winding up was done was given as, is given as 1/4/2018. So, taking this into account, we'll have to give the heading for the statement. So, what will be the heading? Statement of Affairs of Chandran Limited as on 1/4/2018. This will be the heading. And now, when you prepare the statement, for the amount column, you have to give the heading as estimated realizable value. So remember, we are going to take all the assets not at their book values, only at the estimated realizable values. So write as estimated realizable value in rupees. In case if you have an asset for which the estimated realizable value is not available, in such a case, you will be taking the book value into account. So this you have to keep in mind. Now, let us proceed with the answer. The first list we have is list A, so for which you have to write as assets not specifically pledged as per list A. So under this list A, you will have all those assets which are free from charge. Okay, that is those assets on which there is no pledge. So that is why it is given as assets not specifically pledged. Now, while listing these assets, remember you will be entering the current assets first, those assets which are more liquid and current in nature, such assets which are easily convertible into cash, those assets will have to come first. After entering those assets, you can enter the remaining fixed assets. Okay, so let us start with cash and bank. Have a look at the problem. The estimated realizable value we have for cash is 10,000, for bank is 10,000. As you know, for cash and bank, the book value and estimated realizable value will be the same. So we have entered cash 12,000 and then bank 10,000. Okay. Then next we have, I said those assets which are current assets in nature, let those assets come first. So let us enter bills receivable here. So how much is bills receivable? Have a look at the problem. Bills receivable, here we have bills receivable. Bills receivable, you're given, it is estimated to realize only 90%. Actually, the book value of bills receivable is 20,000. Out of this 20,000, only 90% is going to be realized. So you will be entering only 90% of this 20,000. So 90% of 20,000 will give you 18,000 that you will enter here. Now, let us start entering the rest of the fixed assets which are available. Under assets, you have various fixed assets like land and building, plant and machinery, furniture, and so on. Out of these assets, you have to see whether there is any charge over any of the assets mentioned here. Now, when you have a look at the liabilities, under liabilities, you are given secured loan on first mortgage on land and buildings, secured loan on first mortgage on land and buildings. So it means that there is a charge over this particular asset, land and building. So under list A, what all we are taking, what is the heading we give for list A? We give the heading as asset not specifically pledged as per list A, isn't it? Since there is charge over land and building cannot be taken into account under list A. Okay, it has to come only under list B. So let us leave off land and building. The rest of the assets we can take into account under list A. So what are the remaining assets we have? We have plant and machinery, and remember you have to take only the estimated realizable value. Plant and machinery, the estimated realizable value is 12 lakhs. Then for furniture, the estimated realizable value is 50,000. You can check the problem. Then for vehicle, the estimated realizable value is um, 50,000 again. For furniture, the estimated realizable value is 50,000. For vehicle, again, the estimated realizable value is 50,000. Let us again have a look at the problem. So all this we have entered. Then what do we have next? We have stock, isn't it? Stock is 4 lakhs. Okay, that we have entered at the end here. Stock. Then, as far as book dates are concerned, have a look at the problem again. Under book dates, we have a good, doubtful, bad. Okay, bad will never be recovered, so that amount will not come. Under good, what is the estimated book value is given as 8 lakh 28,000. This will come fully, and then as far as doubtful debts are concerned, how much is estimated realizable value? 1 lakh. So this 8 lakh 28,000 and 1 lakh will be entering. Good is 8 lakh 28,000. Doubtful is 1 lakh. Bad will not come. Okay. So the total of book dates here will be 8 lakh 28,000 plus 1 lakh. You will get 9 lakh 28,000. Stock we have entered already. Now let us again have a look at the problem. There is an item given as loans, isn't it? And it is given loans considered bad. So this is not going to be recovered. This is not going to be realized. So this will not come at all. This item will not come. Okay. All the rest of the items I think we have entered. And let us see whether there is any calls and arrears. If you have calls and arrears, that will also come under list A only, because this amount will be realized. The calls and arrears amount will be realized. So it has to come only under list A. If you recollect the format, you will know. Calls and arrears, how much do we have? We have calls and arrears as 10,000, and this calls and arrears of 10,000 will again be taken under list A. So calls and arrears, we have to enter 10,000. So we have entered all the items except land and buildings. Why we didn't enter land and buildings? Because on land and buildings there is charge, and so as far as list A is concerned, we'll have only assets not specifically pledged under list A. Since there is charge over land and buildings, that will not come under list A. That will come under list B. Okay. So now let us see what is the total of the various items which we have under list A. So let us put the total now. So you can add all these amounts and see. So you will be getting a total as 0, 0, 0 again, then 8, 7, 6, 2. It will come as 26 lakhs and 78,000. You can add all these amounts and check the total. You'll be getting 26 lakhs and 78,000. So as far as list A is concerned, that will be the total, 26 lakhs 78,000. Now next we have the next list, that is assets specifically pledged as per list B. As I told you already, there is charge over which asset? There is charge over the asset land and building. You are given secured loan on first mortgage on land and buildings. Secured loan on first mortgage on land and buildings. It is given as 1 lakh and 50,000. Okay. And what is the estimated realizable value of land and buildings? The estimated realizable value of land and buildings is 1 lakh 80,000. Now, as per the format, you have to enter assets specifically pledged as per list B. Under this, you will be having 4 small columns. First column is estimated realizable value. Next one is due to secured creditors. Third one is deficiency ranking as unsecured. Fourth one is surplus carried to last column. Okay, I have already explained everything about the format of statement of affairs in my previous video. So better you refer to that video for a clear understanding of this format. Okay, only if you know the format, you will be able to do an answer correctly. So these are the four columns which we will have. So let us fill up the information in these columns. So what is the asset over which there is charge? The asset over which there is charge is land and building. This is the asset over which we have charge. So write as land and buildings. Let us see how much is the estimated realizable value of land and building. The estimated realizable value of land and buildings is this much, 1,80,000. So let us enter 1,80,000 here. 1,80,000 estimated realizable value. And let us see how much is due to secured creditors. Have a look at the problem once again. So you are given here secured loan on first mortgage on land and buildings, 1,50,000. So what is due to secured creditors? A loan is taken to the extent of how much? It is taken to the extent of 1,50,000 by creating a charge over land and buildings. So how much is due to secured creditors? What is due to secured creditors is only 1,50,000. So I enter 1,50,000 here. So estimated realizable value is 1,80,000. Due to secured creditors is only 1,50,000. So do we have deficiency or surplus? We have surplus. Okay. The estimated realizable value is 30,000 more than what is actually due to secured creditors. So that 30,000 we call as surplus, and that will be written in the last column, surplus carried to last column. That is column D, 30,000. This 30,000 will be taken to the outer column. That is why we give the heading here as surplus carried to loss column. If you have deficiency, nothing will come in the loss column. Since you have surplus here, this 30,000 is taken to the loss column now. Okay. Now, this is what is the amount for list B. We have to find out the total of these two amounts. This amount and this amount together, let us total now. So what will be the total? 26,78,000 plus 30,000 will give us a total of 27 lakhs and 8,000. We will be getting a total of 27 lakhs and 8,000. How did you get this total? It is a total of list A and B together. Total of 26 lakh 78,000 plus 30,000. Okay. And this 27 lakh 8,000 we will call as estimated total assets available for preferential creditors, debenture holders having a floating charge, and unsecured creditors. So what do you understand from this? It is only with the help of this amount of 27 lakh 8,000 the company is going to pay the preferential creditors, debenture holders having a floating charge, and unsecured creditors. In other words, only with the help of this amount of 27 lakhs and 8,000, all liabilities and payments are going to be settled. Okay. Now, as per the format, we are supposed to prepare the summary of gross assets. Under summary of gross assets, first we will be having gross realizable value of assets specifically pledged. So when you say gross realizable value of assets specifically pledged, whatever we have in this column A, this amount will come. What is the gross realizable value of assets specifically pledged? This is what is the estimated realizable value of the asset specifically pledged. What is the asset specifically pledged here? Land and building. So this 1,80,000 will come here. So to make you understand only, I wrote this as A here, which represents the amount in column A. You need not write it when you do it in the exam and all. Okay. So just write as gross realizable value of assets specifically pledged 1,80,000. Now, as per the format, you are supposed to enter other assets. This other assets is nothing but the total of list A. Okay. How much is the total of list A? This amount. That is 26 lakhs and 78,000. That list A total will come here, 26 lakhs and 78,000. So other assets here means assets other than those assets over which charge is created. Okay, so that comes to a total of 26 lakhs and 78,000. Now let us total both these amounts together. Let us find out the total of gross assets. 1 lakh 80,000 plus 26 lakh 78,000. This will give us a total of, just put 000 here. Then you will have a 8, 5, 8, 2. So what will be the total of gross assets? The total of gross assets will be 28 lakhs and 58,000. Okay, so all the information relating to assets we have entered now. Let us proceed further with the liabilities. So continuously in the statement you will be giving the heading as liabilities, and once you enter the heading liabilities, immediately you have to write a very important sentence here. What is that sentence? To be deducted from surplus or added to deficiency as the case may be. First, understand what we are going to do. Okay. While preparing the statement, first we have entered all the assets at their estimated realizable value, and now we have a total of 27 lakhs and 8,000 available. This amount is available for whom? This amount is available for preferential creditors, debenture holders having a floating charge, and unsecured creditors. So, with the help of this amount, all liabilities will be settled. Now, there is an order in which the liabilities will have to be settled. And so, what we'll be doing is from this amount, we'll be making the payment one after the other in that order. While making the payment, from this amount, we'll be deducting the payments one after the other. And at one fine stage, you will not have adequate amount to make payment, so you will get a negative amount. So when you get a negative, from that moment onwards, you will call that negative amount as deficiency. And from that from that stage, with the deficiency, there is a negative amount, all payments will get added up. So till then you will be deducting the payments, and once you get the negative amount, from that moment onwards with the negative amount, all the payments will get added up. That is why when you write liabilities, you write here as to be deducted from surplus or added to deficiency as the case may be. As long as you have surplus, when you make payment, it will be deducted from the surplus. Once you get deficiency, from that moment onwards, along with the deficiency, all payments will get added up. Okay, that is the reason you write here as to be deducted from surplus or added to deficiency as the case may be. And once you start with the liabilities, one more column you have to give here, that is for gross liabilities. So usually we'll call say as a margin, isn't it? That will be regarded as a column now, and there you will be giving a heading as gross liabilities. So under liabilities, the first item will be secured creditors as per list B. So when you say secured creditors as per list B, how much is secured creditors? You can have a look at the information which you entered earlier. Due to secured creditors, we entered here, isn't it? That is only secured creditors as well as B. How much is that? It is 1 lakh and 1,50,000. So this 1,50,000 will come. Secure creditors as well as B. 1,50,000. Remember, this 1,50,000 will be inserted, will be entered in the gross liabilities column only. In the actual payment column, nothing will come, because as far as secure creditors is concerned, there is a charge over the security. That security will be realized, and the settlement will be done automatically with the help of that. Okay, so no actual payment here, so put a dash here, put nil here. Only when you record liabilities in the gross liability column, that 1,50,000 will be recorded. Then the next item as per the format is preferential creditors. Preferential creditors as per which list? Preferential creditors as per list C. So how much is preferential creditors? You have to refer the problem. So in the problem you are given unsecured creditors. So you are given unsecured creditors. See here, you are given unsecured creditors including preferential items of 60,000. So this 60,000 is preferential creditors. So that has to be entered as preferential creditors, list C. So enter preferential creditors as per list C. Now you'll be entering it once in this column, which shows the payment, and again in the gross liabilities column, 60,000. Okay. Now, what is the surplus or the total assets which you had as available for preferential creditors, debenture holders, and so on? It is 27 lakhs 8,000. From this 27 lakhs 8,000, from this 27 lakh 8,000, you'll be making a payment to the preferential creditors to the extent of 60,000. Okay, so 27 lakh 8,000 minus 60,000. 27 lakhs 8,000 minus 60,000 will give you 26 lakhs and 48,000. 26 lakhs 48,000. Okay. Now this is the estimated balance of assets available for whom? Who are the people to whom the payment has to be made? Next, as per the format, as per the order of payment, debenture holders and unsecured creditors. So this 26 lakh 48,000 is the estimated balance of assets available for debenture holders secured by a floating charge and unsecured creditors. Now, next we have is debenture holders. As per the format, debenture holders are to be paid next. So, how much is debenture holders? Let us have a look at the problem. In the problem, you are given secured loan on floating charge on company's undertaking. Secured loan on floating charge on company's undertaking, 8 lakhs. So, this is only debenture holders. So this is debenture holders. Okay. So now let us take it to the answer. Debenture holders. Debenture holders secured by a floating charge as per list D. When I explained the format in my previous video, I told you to remember easily. Remember, debenture holder starts with D, and that actually belongs to list D. D for D, you can keep in mind. So, debenture holders secured by a floating charge as per list D is 8 lakhs. So, show 8 lakhs here, show 8 lakhs under gross liabilities also. Now, from 26 lakh 48,000, you will be making a payment to the debenture holders to the extent of 8 lakhs. So 26 lakhs 48,000 minus 8 lakhs will give you 18 lakhs 48,000. So now this 18 lakh 48,000 is available to whom? For unsecured creditors. Estimated balance of assets available for unsecured creditors. Now, as per the format, we have unsecured creditors as per list E. Unsecured creditors as per list E. You can have a look at the problem to know how much is unsecured creditors. As per the problem, just see the problem. As per the problem, unsecured creditors is 21 lakh 60,000, out of which 60,000 is preferential. So 21 lakh 60,000 minus 60,000, actually unsecured creditors is how much? 21 lakhs. So that 21 lakhs will be shown now. Just see here, unsecured creditors 21 lakhs. Okay. Apart from that, there is one more piece of information available in the problem relating to bills discounted. Just see the problem. It was given as a note. Bills discounted and awaited maturity 20,000, out of which 10,000 is expected to be dishonored. So when 10,000 is expected to be dishonored out of 20,000, the remaining 10,000 has to be taken as unsecured. So that 10,000 again will be shown under unsecured creditors only. So unsecured creditors already 21 lakhs is there. Now bills discounted 10,000. So total unsecured creditors is 21 lakh and 10,000. See, you have a surplus of only 18 lakh 48,000. But how much is unsecured creditors? 21 lakh and 10,000. So now 18 lakh 48,000 minus 21 lakh 10,000. It is at this particular point you will be getting a negative amount. Okay, because the surplus which is available 18 lakh 48,000 is less than what is actually due to unsecured creditors, that is 21 lakh 10,000. So 18 lakh 48,000 minus 21 lakh 10,000, you will get minus 2 lakh 62,000, which you will call as deficiency. Since you get the amount in negative, you call it as deficiency. This will be called as estimated deficiency as regards creditors, being the difference between gross assets and gross liabilities. So at this stage, what you are supposed to do is you have to find out the total of gross liabilities. Okay. So what are the various amounts you had under gross liabilities? 1,50,000, then 60,000. Then what is the next amount you had? 8 lakhs. Then how much did you have after that? After 8 lakhs, you had 21 lakhs and 10,000. Add all these amounts coming in the gross liabilities column and find out the total. You will be getting a total of 31 lakh 20,000. This 31 lakh 20,000 is the total of gross liabilities, and this has to be compared with the total of gross assets which you had under the summary of gross assets. So, how much is gross assets? 28 lakhs 58,000 is the gross assets. Okay, gross assets is how much? 28 lakh 58,000. 28 lakh, just to make you understand clearly, I'm writing it here. 28 lakh 58,000. So 28 lakh 58,000 is the gross assets. Okay, this is the gross asset and this is the gross liability. So what is the difference between the two? If you find out the difference between the two, you will get the same minus 2 lakh 62,000. Okay, if you get like this only, it means that your answer is right. That is what is meant by the sentence estimated efficiency as regards creditors being the difference between gross assets and gross liabilities. So what is the difference? 2,62,000. The same difference comes here also. Is it not right? Now, when you wrote under liabilities within brackets, remember what you wrote? You wrote as to be deducted from surplus or added to deficiency as the case may be. Till now, we have been deducting the amount from the surplus, all the payments from surplus, isn't it? Since we have got a deficiency here, how much is the deficiency? 2,62,000. From now onwards, all payments will be added to deficiency, to be deducted from surplus or added to deficiency as the case may be. So, what are other payments you have? You have 10,000 8% preference shares of 100 each as per list of, that is 10 lakhs. Then you have 5 lakh equity shares of rupees 5 each fully paid as per list G, that is 25 lakhs. Now with this deficiency of 2,62,000, just to make you understand only I've given this negative mark here. Okay, with this deficiency of 2,62,000, add all these amounts. So when you add all these amounts together, 2,62,000 plus 10 lakh plus 25 lakhs will give you a total of 37 lakhs 62,000. 37 lakhs 62,000. This will be called as the estimated efficiency as regards members or contributories. Members and contributories are one and the same. Okay. Estimated efficiency as regards members or contributories as per list H. So it comes to how much? It comes to 37 lakhs and 62,000. So what was your question actually? As per the question, you are required to prepare a statement of affairs. See the question. As regards creditors, statement of affairs as regards creditors and as regards contributories. So when you say statement of affairs as regards creditors, for that your answer is estimated deficiency as regards creditors. The answer is 2,62,000. And when you say estimated efficiency as regards members or contributories, for the second point, the answer is 37 lakhs 62,000. Okay, so this is how you have to prepare the statement of affairs. I hope you are clear with this answer. So today I have worked out a problem involving the preparation of statement of affairs. What is important to prepare the statement of affairs is you have to be thorough with the format. If you are thorough with the format, you can prepare the statement of affairs very easily. I hope you are clear with the answer which I have worked out today. If you like this video, subscribe to my channel and also share it with your friends. Thank you very much for watching this video.